Hi, everybody, and welcome to Progressive Short Takes. This is your host, Joe Firestone. I want to talk about private equity again, and the Fed again, and what the Fed has let um, private equity do. The story is told in the headline of an article in Counterpunch by Andrew Park. Fed bailout allows private equity pirates to loot $10 billion from companies they own. And Park says the pirates of yore at least had to sail the high seas and risk life and limb to seize their loot. Today, Wall Street's private equity pirates are managing to loot the companies they control with a round of bond sales and a lift from the Federal Reserve. This industry, which includes some of the richest people on the planet, has been able to extract $10 billion from the companies it owns since March, assisted by the Federal Reserve's widespread, unconditional support of the financial markets. Private equity firms were not a direct beneficiary of the Fed's corporate bond purchase program, since much of the debt they issue is not safe enough to meet the Fed's requirements. However, by virtue of its purchase of high-quality debt, the Fed has lowered the returns on investment-grade corporate bonds. So investors have turned to more speculative debt, such as private equity's, quote, dividend recapitalization issues. So in other words, what has happened here is since the Fed has purchased the high-quality debt, in doing that, it lowered the returns on investment-grade corporate bonds. In other words, it crowded that debt out of the market. So investors have had to turn to more risky debt, speculative debt, such as private equity debt. In fact, that's what the next paragraph says. It says the Fed crowded out investors in one class of securities and drove them into the arms of private equity. That has enabled private equity executives to enrich themselves to an enormous extent in ways that leave the companies they own on shakier ground, putting workers' jobs at greater risk. But take the case of KKR, one of the biggest of the private equity firms. KKR originally purchased Epicor, a retail and manufacturing software company, for $3.3 billion in 2016. After 3 years, KKR attempted to sell the company for $5 billion in August of 2019, but it didn't find any buyers. Selling the company became significantly more difficult once the pandemic started, so KKR instead came up with a different money-making strategy. Once Federal Reserve assistance had actually reassured investors about returning to the market by the end of the spring, KKR had Epicor issue a massive $2.35 billion loan to refinance its existing debt. KKR, as the owner of Epicor, then paid itself nearly $600 billion in dividends on the basis of a loan. KKR did not have Epicor take out any additional debt in order to make investments to increase the productive capacity of Epicor or to save or create jobs. They simply took out a loan and pocketed the cash, leaving Epicor on the hook to pay it back. Some call these transactions by their official name, quote, dividend recapitalizations, unquote. Others would simply call this looting. others like you and me. Well, there were a number of other companies that have used a similar playbook when it saw KKR's, when they saw the success of KKR. TPG Capital sold a $2.7 billion loan plan for cable provider RCN to investors, while WindPoint Partners sold a $1.1 billion loan for snacks maker Shearer's Foods, according to data from Bloomberg. In total, $10 billion of debt has been issued so far this year to be put into the pockets of private equity. And they're not done yet. So that's the story. I'm not going to go through the rest of the article here, but I will note the final paragraph. The Stop Wall Street Diluting Act, introduced last year, would stop, quote, take the money and run behavior by making private equity moguls legally liable for the debt they saddle portfolio companies with, as well as for company misconduct. The bill also would protect workers' jobs and benefits from private equity looters. And that, of course, would be very important if it could get done. So, thank you for coming. This is the end of this progressive short take. And I'll see you shortly with another one. Thank you for coming. Please go to my Patreon account, patreon.com/Joe_Firestone. Thanks again.